The fact is that our guys on the ground there are saying we can certainly see movements in China, but we're not absolutely certain exactly when this stimulus is going to bite and take hold. So I think we're a little bit more cautious on the rate at which China will come back economically into the global economy. Probably not as early as we'd all hoped, which would have been the second half of this year. But in the long run, it's still going to be there. It has to. It's really important.
But Duncan, you're a student of history as way more than I am, perhaps, as well. You see what happens to countries that industrialise. You see what happens to countries that go from agrarian to industrial. And at one point, the brakes go on aggressively. Maybe we're just seeing a structural slowdown. It's nothing to do with the cyclical.
No, I don't think it's a structural slowdown at all. I mean, if you think about the fundamental drivers for minings and minerals businesses, there are three key ones that are just so important. One is decarbonisation. That's not going to go away anytime soon. The planet cannot afford for it to go away. The second is the eradication of poverty and the bringing people up the living standards curve. And the third is, of course, this very clear realization that food security is going to be a big issue and the quality of food production is going to be a big issue in a growing population. So fundamentally, the drivers of demand for metals and minerals remain very, very strong. It is cyclical. We will see these sorts of cycles happen from time to time. But I think about this more or less on the long-term horizons based on the nature of the assets that we have in the portfolio. And that, for me, looks really good.
Yeah, I'm looking at those assets now. Funny, if I'm on your website and I'm looking at the underlying EBITDA by segment breakdown as well for my sins. I'm looking at the wagon wheel there. And look, copper is there just behind iron ore as well. Copper is one of those materials absolutely essential for the electrification and that broader decarbonisation as well. Copper is one part of it, but do you overall have the right material mix at the moment for the decarbonisation trends, for the electrification trends, or actually is there somewhere you're going to grow organically and buy from outside?
Well, look, we are absolutely going to be looking to grow organically. We've still got amazing growth opportunity within our portfolio, across the portfolio, but quite a lot of that is actually weighted to copper. So 10% of our current growth has actually come from copper. We still have optionality in Finland, we have optionality in Chile, and we still have more optionality within the portfolio in Peru for our copper business. In terms of the balance of the portfolio, look, as far as I'm concerned, those three themes that I mentioned earlier are all going to be deeply, deeply undersupplied in the long run. Even steel. The world is still going to need steel for this transition, and we have the capability to develop out on our own portfolio within the steel business too. So I think this all bodes very, very well in the long run with the assets that we've got.